Hello, my name is Steve Bigelow with the Candlestick Forum. The market's turned, and that's where we can see that evidence easily on the candlestick charts, where when we saw last week when they gapped up in the overbought condition, that kind of accentuates the analysis of the Japanese rice traders provide for us. Where do most people buy? They buy exuberantly at the top. That's illustrated when you start gapping up and starting to see reversal signals in the overbought condition. Today confirmed that the selling of Wednesday, closed below the T line. Today, they couldn't get it back up above the T line. Now, there's a extremely high powered probability factor that once you see a trend close below the T line, the probabilities become greatly enhanced that you're now in a downtrend, like we saw over here. The other side of the coin is if you see a candlestick buy signal to close above the T line, your probabilities are greatly enhanced. You're in an uptrend. So anytime you start seeing this, what human nature normally does is, oh, they hope their positions are going to go higher. But when you start seeing the market sell off, use this T-line probability factor. Again, this is from 40 years of experience of hoping that my good trades will continue higher. But when I see that the market's closed below the T-line, it's telling you the probabilities are starting to go against you. Same scenario on the NASDAQ. When there was a doji indecision, bearish left-right combo. So even though the NASDAQ was up 81 points, as a candlestick investor, we can see much more clearly that when they opened it at the T-line and traded lower, that told us there was still no buying going on, just a little bounce. The probabilities are, unless they open this market up strong tomorrow, they open it weak, we're in a downtrend. So again, this allows us to pinpoint which sectors we want to be long or short. We could see last week in Lucid when they broke out. Now we know this uptrend remains in progress, even though yesterday it sold off pretty hard. What was the most compelling indicator that was not breached? The T-line. This tells us the uptrend remains in progress. Convergence analysis tells us there's new buying coming into the anything related to electric vehicles like QS, QuantumScape. This tells us right here, investor sentiment is building up. Now we can pretty much analyze that once it broke out, look how the T-line still acts as support. So even if the market's heading down, we can still pinpoint which sectors are going to be acting the strongest. As you saw, the Dow was down today, the NASDAQ was weak, and QuantumScape was up big again. Anytime we can utilize the information built into patterns, and it puts us in a situation where we don't have to be depending on other people's projections, predictions. We can see what investors are actually doing. Notice when we did the bounce up off the T-line back here, we're still in an uptrend, and the T-line factor is we just stay long as we don't see a sell signal. So again, November 13th, 14th, this Saturday, we are going to be using a 2-day training to show how the probabilities of being in the right place at the right time is dramatically enhanced with candlestick signals at the T-line. It also allows us to see when it's time to go short. Same scenario, if we see candlestick sell signals and a close below the T-line, the probability factors are tremendously strong that you're in a downtrend until you see a buy signal. So join us this weekend. These are 2 full days of training with hundreds of chart analysis. The point of these trainings are not only to show you the logic of when candlestick signals and the T line work in conjunction, so that you recognize when it's time to be in a position or out of a position, but it also formulates your mental processing to be saying, what am I, or where is the best places to be long or short, and what are my probability factors based upon the T line and the signals, which this greatly enhances your ability to keep your emotions out of your trading. Now, this is from a voice of experience. Being the worst investor in the world, I had to figure out how candlestick signals work, what confirming indicators helped them work, and everything that I applied to my trading was based upon, is this working like the probabilities tell me? So I'm not making decisions because of my emotions, but what the charts are actually doing. So right now, with the Dow closing below the T line and the S&P and NASDAQ also closing below the T line, this changes our perspective that if we've got long positions that are starting to show weakness, it's time to close them out. And we start scanning for short positions. The T line factor or probability factor is extremely strong, that once you close below the T line, consider being in a downtrend. That'll be it. We'll see you in the chat rooms.